So in investing and in trading, there is one simple phrase that Warren Buffett has coined, KISS. Keep it simple, stupid. And as we can see here, there is no simpler pattern than us going up. We have basically completed this pattern over and over and over again. We can clearly see that at the start of the 22 to 23 transition, we had an uptrend followed by a preceding downtrend where the Fed is uncertainty. But once we got that narrative shift, and the narrative hasn't changed still for the Fed of what they're actually saying, what the markets interpret is two different things. But before we digress, talking about that decrease, right? We saw that slam down. We saw that slam down here, and now we have a 4 candles in a row. So 1, 2, 3, 4, and we just kept going for consecutive times until we broke to basically equivalent all-time highs, pulling back and then pushing. So what does that mean for us now? Well, simply put it is, if this is a nice massive A to B pattern on the way up, then that easily projects us up towards this 550, 540 level. So we got about $20 on the cash market to go, and a NASDAQ is a similar story, which we'll cover in just a second, guys. But looking at this, we have a dominant uptrend, and we have a lot of news catalysts coming out this week. We got NVIDIA earnings that we're going to be going over in just a second of what the expectations are, and also some new news that came across the air recently, which was Iranian President's helicopter has a hard landing, TV news says, and rescue is underway. So at this time, we do not know what the status of this is, and we'll keep you guys updated on the Twitter of that. So make sure you guys follow us on that Twitter handle on screen for your convenience. And also, while we're at it, if you guys wouldn't mind hitting the subscribe button, it helps the channel out, and have bell notifications on. That would be greatly appreciated. And if you enjoy this content, throw a like on the video. It really helps us know what you guys enjoy, what we can maneuver and or change. So as always, let's get into the details, guys, of what this week is holding for us. And let's just start off with the news catalyst, right? Let's start off with what happened this week, what's going to happen next week. And simply put it, we had PPI come in at or slightly worse than expected, and core CPI coming in right where we wanted it. I did not understand why this came in at this level. We did some more digging, and as you saw in the previous video, that they took a couple things out of the CPI. So make sure you guys go over in the description. It's linked down below if you want to see more of those details. But it was a very interesting find on my part, and we covered it in the live stream that we stream every Tuesday and Thursday. So make sure you guys hop on for that. We saw home starts basically coming below expectations, which is actually, I'm seeing this in my own market here. Throw it down in the comment section below if you guys are seeing something similar in your areas. I want to see the different scope of what people are seeing in their housing markets. Are more houses popping up, or more homes for sale? What is going on there? And building permits obviously decreasing, and building permits decreasing by 0.3% overall. We saw continuous jobless claims actually ticking up, but the previous number was revised lower. So it's kind of a mix, right? This is a lot of hodgepodge. Manufacturing index obviously shrinking. And we also had a couple things on Friday come out, which was net speculative positions increasing their position size to 225,000 net short contracts, which I said, this is just bear fuel. This is pure bear fuel to keep going higher. They're shorting into a greedy index that we talked about before, and it's just going to fuel us going higher. Again, Saturday, we do have Powell speaking today, so it's going to be interesting what he says. Right now, there's nothing on the news headlines other than the Iranian president thing, but we'll keep you posted on that as well. We do have a crap ton of Fed speakers speaking throughout the week. Nothing stands out really as a data point to keep an eye on. Fed minutes have not even been that much of a market mover because the Fed is very vocal about what their stance is, and they're not really changing their stance. So I don't foresee these Fed minutes moving the market in any way, shape, or form. I could be completely wrong. Maybe they interpret something one way or another, but we'll keep you all appraised of that on the live stream and subsequent videos. But global services PMI may be the only news event on Thursday that has any bearing on the market to kind of send us in one direction or another. And then we have expectations for inflation on Friday, and as always, net speculative positions. So enough about what happened or what is going to happen during the week. Let's just jump over to the levels here and talk about what we need to look at. So looking at these levels, right, it's kind of interesting this week because the gap fill and the previous all-time high are all coincided with one another. And that means that if we start coming back down to that lower level of 519, then we may start breaking down. Whereas if we actually hold that gap fill and let's say we come down to 526 area for the S&P 525 and then rotate back up through 531.52, establishing a new all-time high, then we definitely can keep this momentum rolling. So really, we're going to be paying attention to that previous all-time high of 524.38. And jumping over to the NASDAQ as well, right? We can see a similar pattern forming as there, but our all-time high is actually on a previous rotation that we ended on Friday. So really that bearishness needs to not come back into the market. Again, we're expecting NVIDIA earnings, so we're expecting tech to be the leader of this week. We saw VIX going down to a level it hasn't been in quite some time, and we'll talk about that in just a second. But looking at this, right, where you can see that if we go sideways, would that be such a bad thing, right? If we go sideways on the market, that's just consolidation. That's consensus of price. And therefore, we could then be setting up a nice move to the upside. We can see some of the leaders like the Apples and the Microsofts of the world, right? So Apple pushing off of its 200, trying to claim that 190 number that was previously at. Microsoft having a little bit of a trouble trying to get back through all-time highs. However, a strong move from its lows that it established. Amazon as well, if we go to it, having somewhat of a consolidation to the downside, but could be setting up a flag here to push to the new highs. We got Tesla not really doing much, but that's pretty good for Tesla considering that the rocky bottom it's basically had on the way down from all the way from 240 all the way back to 140, $100 price move in approximately the first 2 quarters. And now we're sitting right around 180, kind of consolidating, giving consensus of price, building that base where it can start pushing back up. Meta did try coming for that gap fill, but failed, and now is below the 9-day moving average, fighting it out, right? Still fighting it out, but definitely could be seeing this leader kind of dragging to the downside. Netflix is struggling to get back above all-time highs, but definitely could have a new all-time high coming for it. So we're going to have to see how it plays out. It is slowing, as I would say. I think it needs to cool off a little bit more. Maybe look at some downside potential. However, if you break above the previous high that's established here, that 630 number, then I would say that we are definitely pushing new all-time highs on Netflix at that point, and my bearish thesis on it for the short term will be incorrect. But going back to the NASDAQ, just recapping the levels, right? 441.65 would be a big bummer move. And really any rotation below 450, which was the low of the Friday. So we have to see how we do there. And also 454.69 breaking to new all-time highs obviously will be bullish. S&P, we're looking at 531.52 as the break to all-time highs, 524.38 being the rotationary point that we really don't want to see printed this week, and then 519.74 being the all-time bearish note where we're starting to see a change in character. We'd be below the 9-day moving average and heading towards that 50 again, which would be pretty bad considering that we violated the 50 recently. We really need to just get away from it. If we look at some other riskier assets like Bitcoin getting back above its 50 on the Friday close, which is impressive because it's also the weekly close. So therefore, Bitcoin could keep going higher. We could start tackling those 70,000 price points, not 7,000, geez. And also, if we look at China as an example, China's just been a straight line up, right? China's bullishness has propelled the market or held it up, as I would say. And that's it's reaching a resistance point that it previously had with these upper peaks right here. So it still has some room to move, but then again, we have to keep an eye on China because, well, if their markets start tumbling, then we could definitely be dragged down with them. And the VIX is another warning sign that insurance is dirt cheap right now. But if insurance is dirt cheap, it can stay dirt cheap for quite some time. We saw this consolidation all through the beginning of 24 on the VIX. We did have that large spike in April, and then we have consolidation downwards. This means that we could go through a consolidationary period on the VIX and not really have a bullishness in it, which could propel the markets further as we keep churning away and hitting all-time highs. So We're going to have to keep an eye on this. I'll keep you guys appraised of this. And last but not least, let's just review yields before going into biggest winners and losers. The 30-year just staying in this channel, right? We went to the top of the channel, broke out a bit just because of inflationary fears, and now it came all the way back down. So I think the 30-year is just going to chop sideways, up and down, up and down, up and down, as we kind of get to that precipice of when the Fed is actually going to start cutting rates. I don't think it'll be in 24. I think you may get rate cuts in 25. And also, if we look at the 2-year, right, it is supporting that thesis that it's going to take 2 years to get to 4.8. That would indicate 3 rate cuts in the next 2 years. That could all be front loaded into the latter end of 2025 for this based on how it is priced. When we start seeing this come down lower to like 4.5, 4.3 is when we really would be pricing in more rate cuts this year, just because the time frame of what that projects out. We can see the 10 and 20 all looking about the same, right? All that consolidation of the channel. TLT still looking like a heap of crap, as I would say. And I do think that we're going to have a little bit of chop in bonds as we kind of head into this lull period where there's not a lot of catalyzed news. We get PC the following week, so we're only going to see NVIDIA earnings this week and some Fed members speaking. So what is PC going to come in at? What is it going to propel the market, right? So it was the lagging indicator of everything. Is it going to go through its inflationary phase now, where we're going to, what CPI and PPI we're going through, or is it going to give us a more rosy picture, like they're going to take stuff out of it like they did CPI? So make sure you guys throw in the comment section below what you think is going to happen. And if you guys have any ticker requests that you want covered on the stream, make sure you guys drop by and say hi. So with that, guys, we're going to jump over to Fatal's part to give you the biggest winners and losers, and then we're going to be back to debate some of the things that are going on in the market and talk about a reverse repo, fear and greed index, all that good stuff that you guys always love. So take it away.
With inflation coming in right at expectations for both core and non-core CPI, the markets only know how to do exactly one thing, and that is to go up. On the 5-day, the S&P 500 gained at around 1.36%, and just on Friday alone, it actually didn't do too much. It just stayed roughly flat, gaining only 0.12%. And now that CPI is essentially over for the month, next thing that we gotta look forward to, aside from the FOMC, it is of course earnings. Guys, we're still going through earnings season. The tech companies are essentially over, but here's the thing though, we actually have Nvidia this week. So yeah, it is Nvidia day. However, prior to that, we also have a pretty good decent amount of companies over here. On Monday, we got companies like, for example, Zoom, as well as, actually, I think that's about it. That's the only one that really sticks out when it comes to Monday. Maybe Palo Alto. I think Pelosi sold that one recently or bought some of that recently. I think they fell a significant amount too. Nonetheless, though, I believe that those are the only two ones on Monday. For Tuesday, we got Zim, Macy's, Lowe's, which we may want to take a look at that one for the Tuesday stream. On Wednesday, the big ones would definitely be Target and, well, Nvidia. So we're probably going to have an Nvidia day like we always do every single time we have Nvidia. Seriously, we could talk for 2 hours just on Nvidia alone. It's absolutely crazy. And then on Thursday, we got companies like Intuit, TD Bank, BJ's, Workday, Medtronic, Polestar, and a bunch of other ones. And lastly, Friday, Booz Allen Hamilton and Mesa Labs. And looking now at the heat map, we can see that most of these companies were in the green, starting of course with the technology sector. Not surprised that most of these guys are in the green. In fact, the worst performer, guys, only lost 2.48%, and that was JBL, only losing 2.5%, and the best performer is actually the company SMCI, gaining an astounding 11.2%. In the communications sector, honestly, more red than green, believe it or not. Worst performer here, it is the company over here, Paramount Global, losing 7.9%, and the best performer, it is the company News Corp, gaining 4.72%. In the consumer defensive, it's actually really easy to figure out which one was the biggest loser and the biggest gainer because it's complete opposites of one another. Worst performer here, it is the company Clorox, losing 5.39%. You guys can see that this is down to 135. This is one that I believe that the last time I covered them, a good price was at around like 120 or 125. So maybe a good price to buy out right now. And then the best performer was Walmart. They had earnings on last week, I don't remember what day, but it was last week, they gained 6.89%. Looking now into the healthcare sector, most of these were in the green, guys. And before we get to the best performer and the worst performer, we can see that UNH, guys, the company that a lot of people were telling me, oh no, this thing is just going to go like down even more because, you know, of all these other issues, $524 right now. So hopefully you bought when this thing reached a low at around 460. Hopefully you bought then because yeah, there it is. Right? There it is. Not saying that it may be a bad buy right now. We'll have to do this kind of free cash flow. I'm just saying that it was a much better buy just a few weeks ago. So never lose an opportunity like that when it comes to a company. Again, just because it's going down doesn't mean that it's necessarily a bad investment. In fact, most likely it is not. Nonetheless, though, when it comes to this sector, we can see here that the worst performer was none other than the company Charles River Laboratories International Inc., losing 2.85%. And the best performer, it is the company Moderna, gaining 13.3%. Looking now into the financials, I gotta say, the fact that the bank term lending program ended, the fact that credit card debt, by the way, guys, has reached a brand new high, which we'll probably cover that as well during the debate. With all of that happening, we have still yet to see any cracks forming. Granted, it doesn't mean that there aren't cracks forming. I'm just saying that nothing too visible just yet, or at least nothing in the mainstream. Worst performer here, it is the company Synchrony Financial, losing 3.91%. And the best performer, it is the company CB Chubb, probably because Warren Buffett or Berkshire Hathaway just disclosed the fact that they own a little bit of this company, gaining 7.63%. In the consumer cyclicals, it's actually really easy to see which is the best and worst performer. Worst performer, it is Lululemon, losing 5.1%, and the best performer, Tesla, gaining 5.34%. Looking now into the industrials, this one, guys, actually has a pretty interesting thing happening right now because, well, it has to do with, ironically enough, the best performer, question mark. I'll show you guys in just 1 second. Nonetheless, though, when it comes to the worst performer, it was none other than the company Axon Enterprise, losing 4.83%. And here's the thing, though. The best performer, 3M, gaining 6.4%. Now, the reason why this is a little bit confusing in a way is because, guys, 3M cut their dividend. In fact, they cut their dividend down to 70 cents. Now, they didn't announce it as a cut, believe it or not. They actually really didn't. However, if we take a look at this graph when it comes to their dividend history, we can see that they were paying $1.25, $1.26. The last time was on February 14th. And then boom, out of nowhere, 70 cents. The reason for this is probably because of the fact that they definitely spun off a few of their segments. And guys, honestly, I'm kind of fine with this, right? I'm kind of fine with this. A lot of people are commenting. In fact, if we take a look over here at the comments, a lot of people are saying that now that the dividend is cut and there is new management, 3M, might be worth a look again. And then somebody responded, apparently it seems that a lot of people agree with you because the stock is doing really good all of a sudden. Right. So the fact of the matter is that I look at this, I'm like, yeah, it sucks. It's a dividend cut. I noticed my overall yearly dividend fall by like $100. I'm like, whoa, what happened here? Turns out there was 3M. Honestly, perfectly fine. As long as they get the company back on track with I wouldn't say no lawsuits, but just settle down with the lawsuits and start to build up that cash flow. I personally don't care if the dividend gets cut. It will eventually go back up there. And, the fact that it's going up tells you something, right? Tells you something. Looking now at the real estate sector, most of these companies, guys, were in the green. Worst performer here, actually only 2 of them lost, and that was the company CPT, only losing 0.13%, and the worst performer was the company CoStar Group, losing 2.65%, and the best performer, it is the company Equinix, gaining 5.56%. The utility sector, it is no longer an emerald unlike the past few weeks. We can see here that the worst performer, it is the company GE Vernova, losing 2.78%, and the best performer, it is the company AES Corp, gaining 6.72%. And the energy sector, honestly, with energy still going up in the CPI, the energy sector just isn't really moving. You got over here the worst performer, Chevron. Dang it. Dang it. The one that I own, losing almost 2% at 1.9. And the best performer was the company Valero, gaining 6.36%. And lastly, when it comes into the basic materials, worst performer here was the company FMC, losing 5.26%. And the best performer, it is the company, if I can get it for you guys right there, Freeport McMoran, gaining 5.12%. All in all, though, guys, CPI really didn't do much of anything. Well, I guess it did to the upside, right? People got very, very excited with the fact that it came in line. However, if you guys have seen the video that I just posted a few days ago where the CPI actually got fudged because the BLS actually took out coffee prices because of the massive spike in April, which made the CPI look a lot lower. So yeah, whatever that's worth, a lot of people are looking at it and they're like, yeah, this is not reality in the slightest. Things have not gotten cheaper. In fact, things have gotten a lot worse. So we'll see where that heads up. That pretty much does it for this part of the video, guys. With that said, take it away, Mike.
So I think we naturally start with NVIDIA, up or down?
Well, if you take a look at the past several quarters, you would expect it to shoot up 40% in the next like 5 minutes when the earnings come out, right?
Or is it going to do 20% before earnings, then 40% on earnings?
Oh, right. I just don't know, because it feels like earnings. It feels like when it comes to the tech companies, they could do no wrong. So even if they come in like, in line, say that again.
Subpar, or like you're saying in line.
Right. They're still going to shoot it up. They're going to find whatever reason to shoot it up, because that's apparently what we're seeing nowadays.
Yeah,
right? It doesn't matter anymore.
I definitely can agree with that sentiment, especially with, as we saw, like, well, let's take a look at AMD, right? AMD's earnings, and even though their earnings weren't stellar, right? Like coming around here, it just went up, right? So let's take a look at Intel, same story, right? It actually had a little bit of a bottoming afterwards, but still, then again, Intel is a bad example just because it's Intel, right? It's had
Qualcomm would be a better example, actually.
So let's see.
If you look up Qcom.
Okay,
that one's a much better example.
Exactly. It's
Boom.
literally earnings to the moon. So
right. So I didn't really take a look at Qcom's earnings, though. So maybe that is a valid reason. But what we have seen right now is that there really is no valid reason anymore.
Yeah,
right?
Qcom, just looking at this, right? Revenue in line, EPS in line. So not really seeing that catalytically driven insanity. Like we can even look at AVGO, right? Well, their earnings is coming up, but previously they just been solidly sideways, right? So I'm sure we're going to get the sympathy play with NVIDIA. I think let's jump over to the expectations, right? Just to see what they're saying. And of course, 36 to the upside, 2 to the downside. They're expecting 24 billion.
Well, you know something though? This is progress, right? This is progress, because what have we seen?
There's two to the downside.
Correct. Yep. Because what have we seen in the past several quarters when it comes to NVIDIA?
Like 40 or 38 to the upside and 0 to the downside.
Basically all of them to the upside. So now we're seeing some, I guess, pushback, though, it's still massively swinging to one side. And, that's just, it's called, I don't know, euphoria in a way. Because, like, think about it. How much of the GME thing that just happened last week, how much of that is going to translate to NVIDIA when they have earnings? You gotta think about that as well.
Yeah,
right?
you could look at it like that, right? Like if we pull up GME stock real quick right here, we can see that it just had a buy the buy the bag moment, right? As I call it, where it went to like $80 on this day right here, and in pre-market,
and then immediately look at that.
Yeah,
To anybody who bought there, I guys,
no,
I had
really.
A lot of people. What's up?
Well, look, there's people that bought at 120 and still haven't sold, probably.
Well, look. Whenever that whole thing with GME was happening, a lot of people at work, they were like, "Oh, are you buying it? Are you buying it?" And I'm just like, "No, this is not. Yeah, but it's going up." I'm like, "This is not investing. This is not investing. This is pure gamble. Oh yeah, but what if it continues to go up? I'm like, it's okay, and
Go to Las Vegas. Like you
right.
mentioned, I mentioned that example with a friend that his wife said, put 20 grand in it. Don't care if we lose it all. I'm like, you say that now. And my response was, go put it into long dated VIX options for a slight volatility spike. I'm like, if like you're playing the gamble, right? If you're playing the big payoff 10 to 1, 20 to 1 payoff, go buy Bitcoin at that point, right? At that point, you can still have some intrinsic value in it, and or do options on Bitcoin, right? Like do something crazy. Do YOLO Nvidia calls on earnings. I'm like, just don't do the GME thing because I'm like, history, right? Just semblance of history. How many times has it bent you back over onto the downside?
And that's the thing too, right? That's the thing too. I do not promote, me personally, right? I do not promote people, you know, if they're going to put $20,000 in something, I'll be like, bro, put it into a good cash flowing company, right? Where the dividends could reinvest, where it'll compound like over the years that, you know, the company has great cash flow, right? Don't just throw it away. Like $20,000, that could buy you so much of a great company. Why would you just waste it away like that?
Yeah, and Exxon, Chevron, like the list goes on of like things you could do, right? But it's all about, I want the reward now. I don't want to wait. Right.
It's the quick satisfaction thing, and that's the fastest way to lose money. And me personally, the way that I see it is, I see personally, the way that I see Nvidia right now, with just how high it is, I see no difference between putting in money right now into Nvidia and putting in money into like GME. I don't. I see no difference because the way that I see both of them is it's a gamble. It's just like, why? Well, less Nvidia, right? Because at least Nvidia has positive profit metrics, but it's the massive overvaluation is absolutely crazy, right?
Yeah, like
it's
you always say, you can always overpay for growth.
Right. Exactly. Like, okay, great. AI. Well, how many of you or how many people during the 2000s said, but the internet? And then look at what happened, right?
The graveyard of dot-coms.
Out of how many hundreds of companies that were during the dot-com, how many of them survived? Like 10? A handful of them? Right? And how many of those...
There were thousands.
Well, right. But how many of those, right, that crashed during dot-com, how many of those went from $113 down to $6? How many people would have held from $113 down to $6?
And then held until now.
Right. By the way, I'm making that because that's Amazon's story. Right? That's literally Amazon's story.
Yeah. So I remember that one.
So I look at this and I'm just like, it's still a massive, massive overvaluation. But here's the thing too. There was actually a company this past week that actually cut its dividend. It sucks because they were a dividend king, but they actually cut their dividend. And you know what the stock price did?
Collapsed?
No, it actually went up.
Okay.
It's actually gone up. And the reason for it is because they're basically taking steps. They're like, okay, we can't afford this $1.26 dividend. We need to scale it back and we need to focus on the company. And people like that. And that company is
being properly structured, right?
And that company is, get ready for this, 3M.
Really?
3M. 3M cut their dividend down from $1.26 to 70 cents. And look at that.
Yeah, the thing is, like 3M, like looking at this like on a massive time frame, right? Just you have a lot of ground to make up.
Well,
you were at 215.
Yeah, but majority of that spike was COVID related. If you look at it again, that was because of the whole N95 masks and that kind of stuff.
That was pre-COVID.
No, it wasn't.
2018.
This
is the COVID spike.
Fair enough. Oh, that's the COVID spike. Oh, okay.
Yeah. Their crazy bubble company run, if I look at this, right? It's going flat, goes parabolic, and this is the result, right? A lot of people like to argue that, companies can't, they won't reverse parabolicness.
Oh,
yeah. Well, just wait. Wait.
I mean, you got 3M over here. You got what's another one that we like, Generac. Right, that one's massive.
Yeah, well,
right?
I meant it for NVIDIA, right? Eventually, the NVIDIA hype is going to stop. It took 3M almost a decade to do revert. It took them a decade to build it, and then 3 years to completely wash a decade away. So the same thing can happen to NVIDIA, right? I'm not saying that don't play bullish on NVIDIA or bearish, right? Either way, but I have to understand that eventually all this comes home to roost. NVIDIA can't keep pushing doubling earnings every time.
The correct statement would be companies or stock prices eventually go down to their fundamentals. Eventually will match fundamentals. There you go.
It's Warren Buffett is literally the embodiment of that, where if you look at what he's invested in, right, of what these evaluations and buying at these evaluations and then compounding over time, it's the product of it.
Right, exactly. So, it's not really a surprise that we have seen a massive rise when it comes to the markets this past week with inflation coming in as it did, and then markets were like, oh, it's coming down. Even though, if you guys haven't heard, they actually removed the price of coffee for the inflation calculation. They removed it for the month of April. And if you guys take a look at coffee prices, to be specific, they shot up massively. But when it comes to inflation as a whole, it came in line with expectation. And then markets ran with it. Even though we saw that energy, because I know you have WTI pulled up right now, energy is in the positive, and by the looks of it, it will remain in the positive for the months to come.
Oh yeah, it's going to be fun with the preceding month, right? So you're not even oil has to come down significantly to not be a positive change for the CPI. Right. And you're also going on a decreasing previous year number. So again, it all hurts you together. And we're going to get PCE next week, right? So this week's going to be NVIDIA hype. And then we're going to get PCE next week. What is PCE? Because it was the most lagging indicator, according to Powell, right? It took the longest. Are we going to see what CPI already did with its massive rise in PCE? And is that going to cause markets to have some turmoil?
So what you're basically saying is that when PCE comes out for the month of April, we're going to see the effects of CPI, not from last month, but 2 months ago, reflected now in the PCE, because it is a much more lagging indicator than that of CPI. Is that what
we saw saying? PPI be the one to start ticking up, and then we saw CPI being the one that started. CPI is the one that started ticking up. For PPI first, then CPI, then PCE, and PCE was always the one lagging behind 2 months roughly.
Right. Okay. Well, we'll see what happens with that. I don't necessarily know what PCE will do, but we'll cover it here on the live streams when that time comes around. So I just want to ask one more thing: is the needle broken? Is the needle back to being broken?
Of course, it's broken. What do you expect in this bullish market?
How long were we in that fear, though?
A week or two.
A week and a half?
Yeah.
Oh my goodness.
Timeline. It's like, so we were below 50 on April. Let's see. April 12th to May. Yeah, a month. We were there a month.
Wow. But apparently there's nothing wrong, right?
Yeah.
But apparently there's absolutely nothing wrong. And guys, stonks only go up apparently, right? Because that's apparently what's happening right now. That's looking like what's happening right now. It's like, all right, y'all want to keep pushing this up? Fine by me. I own stock. My net worth is going up, right? I own Broadcom. I don't own NVIDIA, but man, if Broadcom goes up because of NVIDIA, I'll take the W. I own 9 shares of Broadcom. They're worth more or at par with my 123 shares of Chevron that I bought back during COVID.
Yeah, Broadcom, just all the semiconductors have gone astronomical.
Right. So I'm like, all right, you guys want to keep it? You guys want to keep pumping these the semiconductors? All right, whatever. I don't care. Make my day, right? Make my day. So it'll be very interesting, guys. This week, it's just NVIDIA. It's straight up NVIDIA. We're going to have a live stream this week. Mike, when are we going to have the live stream this week?
I can do Tuesday and Thursday like regular.
So we can't do Wednesday when NVIDIA hits?
Yes, sorry about that.
Okay, so we're going to cover NVIDIA earnings when?
You want to do it Thursday?
All right, sure. Why not? So, guys, this week we're going to live stream on Tuesday and Thursday. And Thursday we're going to cover NVIDIA. We'll probably do a separate video, just cover. I'll probably do it. Or maybe like together, like a standalone video with us together. Like how we did last time, just covering NVIDIA, right? It'll be a 15-minute video, you know, Mike, so chill out. You don't have to worry about it. But yeah, we're going to live stream Tuesday and Thursday covering anything that may happen, right? Anything that may happen. And let's see, what else is there? Oh, and guys, at least on my end, I finally managed to get a webcam. So during the live stream, I'm going to set up the live stream so that it has my face cam. All right, so we'll see how that works. I don't know how we'll do it with both of us. Maybe one day, but we'll cross that bridge when we get there. Yeah, but for me, I will have a face cam from now on whenever we do a video starting Monday. So yeah. So thank you so much for watching, everybody. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. And if you would like to join us on the Discord, just ask for the link, and then we'll send you the link on the reply comment. And again, we'll be live streaming this upcoming week, Tuesday and Thursday at 7 p.m. Eastern Standard Time. And yeah, make sure to join us there. So thank you so much for watching. Peace out, and we'll see you all next time.